SpaceX is going public on June 12th. And buried inside the filing documents nobody is reading are 5 things the banks running this deal would rather you never find. Most people will click buy without knowing any of them. Here they are. Everyone keeps saying SpaceX IPO price is $135 a share. That's true, but that price is not for you. Here's how it actually works. Before a stock ever trades publicly, the company and its banks sit in a room and sell shares quietly to big institutions. Hedge funds, pension funds, wealthy insiders, they get $135. By the time you open your app on June 12th and try to buy, the stock has already been trading for minutes, and the price you'll see won't be $135. It'll be whatever the market has already pushed it to. Could be $160, could be $200. Nobody knows yet. So the price plastered everywhere in the headlines? That's not your price. Your price is whatever's left after everyone else has already taken their seat. Think of it like a restaurant with one table left, except the menu price you saw online was for the people who booked 3 months ago. You're walking in off the street and paying whatever the waiter tells you tonight. Ask 10 people what SpaceX does. 9 will say rockets. That's not wrong, but rockets are not what's keeping the lights on right now. The real money engine inside SpaceX is Starlink, the satellite internet service beaming internet to phones and homes in over 160 countries. Starlink alone brings in the majority of SpaceX's revenue, and more importantly, it's the only part of the business actually turning a profit right now. The rockets are growing, but slowly. The new AI division they folded in recently is burning cash, not making it. So here is what you are actually buying when you buy a SpaceX share. One really strong product, carrying several other products that haven't figured out how to make money yet. That's not a deal breaker. Every big company starts somewhere. Amazon lost money for years, but here's the catch. You're not being charged Amazon's early price. You're being charged Amazon's finished price for a company that hasn't finished yet. And that's exactly what makes thing number 3 so uncomfortable. SpaceX is being valued at $1.75 trillion. Let's make that number feel real. Apple, one of the most profitable companies ever built, is worth around $3 trillion. SpaceX is being priced at more than half of Apple, except Apple made $390 billion in revenue last year. SpaceX made around $19 billion. So you're paying Apple-level money for a company doing about 4% of Apple's revenue. Apple took 40 years to earn that valuation. SpaceX got it in 40 weeks. Same rockets, same satellites. What changed was the story around them. Here's the simplest way to think about it. Imagine a bakery makes $1,000 a month. A fair price to buy that bakery might be $10,000 or $20,000, maybe $30,000 if it's growing fast. SpaceX's bakery makes $19 billion, but the asking price assumes it'll one day make $400 or $500 billion. It's not there yet, not even close, but the price is acting like it already arrived. When you buy at $1.75 trillion, you're not buying what SpaceX is today. You're buying what someone hopes it becomes in 15 years. And if that future takes longer than expected or looks slightly different than planned, the price has nowhere to go but down. This one is already sitting in the public filing documents, written in plain English, and retail investors walk straight into it every single time. When a company goes public, the people who already own shares before the IPO, the early employees, the early investors, they can't sell immediately. There's a waiting period, usually around 6 months. It's called a lockup period. Now think about who these people are. They bought into SpaceX years ago at maybe $10, $20, $50 a share. And now the stock is trading at $200 or $250 or whatever the market opens at. They are sitting on life-changing profits, and they are waiting for the clock to run out so they can cash out. For SpaceX, that clock doesn't open all at once. It opens in waves. The first wave hits just a few months after the IPO, then another wave, then another. Each wave is a flood of cheap shares entering the market from people who want to sell. And who buys those shares? The people who got excited on day one and bought in at the peak. That's the trade you don't see coming when you're caught up in the opening day excitement. It's not a conspiracy, it's just a schedule. It's already written down in the filing documents. Most people just never read them. This is the sneakiest one. The feeling you have right now, that you need to decide by June 12th or you'll miss it forever. That feeling is not an accident, it's engineered. IPOs are designed to create a now or never moment. The countdown, the ticker, the headlines about historic valuations, all of it is pressure, and pressure makes people skip the homework. Here's the reality. If SpaceX is truly a generational company, and it might be, it will still be available to buy in 6 months, in 1 year, in 3 years. The great companies of the last few decades stayed on the market for years and years after their IPO. You didn't have to own Amazon on day one to retire comfortably on Amazon stock. The urgency being sold to you is not about your opportunity. It's about someone else's exit. Patience costs you nothing. Panic costs you everything. Here's what the hype machine definitely doesn't want you to know about timing. You have 3 options. Option 1, buy on day 1 at whatever price the hype has pushed it to. You're at the back of the line right before the lockup waves start hitting, weakest position possible. Option 2, ignore SpaceX completely forever. But that's throwing out a genuinely remarkable company just because the timing is messy. Option 3, do nothing on June 12th. Literally nothing. Wait for the first earnings report. Now you have real numbers from a real public company you can actually hold it to. Wait for the first lockup wave to pass. Let the price find its real level without the artificial pressure of hype and forced buying inflating it. Then look again, with clear eyes. No countdown clock, no noise, just the business and the price. That's not missing out. The 5 things you just learned, they'll still be true in 6 months. The lockup schedule will still be there. The price will still have to justify itself. The only thing that disappears after June 12th is the noise. And the noise was never on your side. Here's the one thing worth carrying out of this video. Every time you see a hyped investment, ask one question before anything else. What does this company actually have to do for me to make money here? Not will it go up tomorrow, not is it a cool company, but what does the math quietly demand from the future just for you to break even? That question will save you more money over your lifetime than any hot tip ever will. Either way, remember this. June 12th is going to be loud. The hype is real, the company is real, but the price has already done the celebrating for you. Watch the open if you want. Just don't let the noise make the decision for you. The filing documents are public. Everything we covered today is in there. Go read them. See you in the next one.